Look at any particular asset class or market around the world. You would think that everything was calm and peaceful. You would think that there weren't any tensions. Look at volatility. It's historically very low. But what we are looking at is a mirage. We're being fooled. Unless you want to believe that ignorance is bliss. You came here for the truth, so let me unveil that for you. Today we're going to look at the risks that are present right now. I will talk about each very briefly and then move on. Let's start with this. Stocks on world indexes edged lower, and the Mexican peso and Canadian dollar fell on Tuesday amid concerns over trade issues, even as U.S. tech shares extended recent gains to boost the Nasdaq. So once again, we have seen only a handful of stocks pushing up the market. In this case right now, as of this recording, the market is down only slightly as a whole. But if it wasn't for those handful of stocks, the FANG stocks as they call them, we would not have this same growth that is apparent in the markets throughout the past few months. The market started tanking as of late January into February, and then the only stocks that really rose out of that were tech stocks. And that's okay, but we can't just have a few stocks persisting to grow and the rest of them either stagnating or going lower. That's not a healthy stock market. That's what I want to say about the stocks. And then I want to go to housing. More than half of U.S. housing markets were overvalued in April. That's not me saying this. That's CNBC. Home prices nationwide jumped 6.9% in April from a year ago. According to the latest monthly value report, it's slightly less than the 7% annual jump in the month before. It's making more and more markets unaffordable, and of the nation's 50 largest housing markets, half of them were overvalued. Think about that. So when you look at the top 50 places where people are living, half of those places are considered to be overvalued. That means people are pushed over the edge. I talked about San Francisco just recently. That is obviously an extreme example, but it highlights the point that I'm trying to make. Essentially, people are pushed to the edge in terms of what they can afford. They try to move to a different area, and that makes that area more expensive. You have more building in that area. It just gets more and more expensive. It's a cycle that continues. Interest rates are so low, and that allows people to get mortgages at prices that are historically very, very cheap. But when you have to then refinance after that 5-year period or whatever it is, you suddenly find that interest rates have risen. You're going to have a problem. This is something I talk about all the time. Let me move on. Now, this is Bridgewater. You may know of Ray Dalio, right? So he has this daily report that they put out, daily observations. And in this report, most recent one, he said that he's bearish on just about everything in the U.S. financial assets. That's a pretty bold statement. So recently, he was shorting the markets in Europe, and he was really targeting Italian banks specifically. I want to look at this. Bridgewater Associates, the hedge fund firm led by billionaire Ray Dalio, is outperforming peers this year even after losing money in April. What he had done was started to short the market. Then he added to his shorts. Then he added to the shorts. And he was looking like a fool. People were really putting him down. But he just kept adding and adding and adding. And he had billions of dollars riding on these shorts, hoping that the European financials, specifically when we look at Italy, was really his focus and what I saw, that they would come down. And like I said, looked like a fool for a little while, but now he profited big time. So that's how it always works. When the market's moving up, you look like a fool. You really do. But eventually, you start to be able to reap the rewards of your decisions, of your intelligence, of your smarts, to be able to say, this is what I know is going to happen at some point, so I have to go based on that. But you got to be smart about it, and you have to be willing to cut your losses sometimes. So, of course, he wasn't entirely, the whole company wasn't invested in shorting this European stocks or shorting the, Italian one specifically. But that was a big bet that he made and profited handsomely from it. I feel a very deep concern for what's happening right now in Europe, not just for Italy, but for other countries as well. Look at Spain. Look at what's happening with basically all of the countries. They can't get along. There's no way that they're ever going to be able to, what they promised in the beginning, all of their so-called, with the whole agreements that they made. There's no way. There's absolutely no way. The amount of debt that they carry is always too much. They can never have the levels that were promised. It's just impossible. The withdrawal of US dollar funding by the Fed is rising with the issuance of debt by the US government. So you'll see that here. The font might be a little small. The pink line is Fed balance sheet reduction, and that is over time increasing. They're apparently going to be going up further and further and further. We'll see. And the blue line, cumulative net debt issuance. What I can tell is that the Federal Reserve has trapped themselves into a corner. I think they're making a big mistake by doing this. I think the best thing for them to do is ultimately to just print the dollar into confetti, and let's see how the party rolls. European banks have declined. And by the way, the reason I mention that is that they have no other options but to print. The market's going to come down should they stop. And they're starting to roll that debt off. It's going to take years and years and years, but there's no other buyer to come pick up the pieces. So I don't know what they're doing. Anyway, European banks. This right here has come down significantly. I think this is a concern that we should be watching, not just in Europe, but all financials. It is important to take a look at how they've really, they came down for a period of time. This is only a 1 week period anyway, but they came down and the markets were reassured, okay, everything is going to be just fine. But here they start their slide again. This is always going to be this way. Volatility is not going to be represented. I mean, if you look at the volatility chart, it spikes up, but it comes right back down. And then it's down here for a while, and then it just spikes back up, and then it comes down. They can't control it. These spikes are uncontrollable. It's interesting to see, despite the fact that the Fed admits they have a short position on volatility, that they still experience these spikes occasionally. Now, Brazil's central bank steps in again after Real weakened to the 2-year low. So you'll see this here for yourself. I believe that this intervention is something that all countries are doing to some degree. This is something that you want to do intentionally in order to make your exports cheaper. You want to be able to get, these markets to stabilize in your favor. So they intervene in the markets. I don't think this should, don't even agree with central banking, but this is what they do. Okay. So with Brazil, I found it interesting because I was talking about Venezuela, I was talking about Argentina, and then I mentioned Brazil. Some individuals from Brazil thought, hey, Brazil's not like that, okay? And they got offended by it. But I knew that we were going to have additional turmoil in Brazil, and we are experiencing that right now. Brazil is bigger, than Venezuela. There's no doubt about that. And I'm not saying that they're the same country. There's clearly many, many differences, and Brazil has certain advantages. It's part of the BRIC nations. It has a bigger economy. There's no doubt. But the contagion is spreading. And we have to be very careful in Brazil right now. If you're in Brazil, watch out. Okay, that means getting your hands on real assets. Because if you experience inflation, which remember what happened in Venezuela, in a year's time, which isn't really that long, before you know it, in a flash, things change. Don't be in the same position. Get yourself into something real. And you will be doing much better off than the average person holding on to that currency. That currency is not going to do you any good. You want to have some, but you don't want to have your savings in the currency. Okay, that's my point here. So essentially the reason I mentioned this is that we have risks associated to South America right now, 3 countries particularly that I am focusing on. This here is out of Real Investment Advice, talking about the investors, right? What I believe they don't understand is how interconnected the global economy is today compared to the past. Something I talk about all the time. This is why I bring it to you. As each year progresses, the role of world trade increases and the role of non-US operations in our largest multinationals multiply. Just look at the ever-expanding role of exports and non-US sales in the S&P index. It's increased as a percentage of the total revenues by 2.5 times in the last few decades. All right. It's going to go on to more details. I just wanted to show you that there are so many risks that are present right now. The market hasn't priced any of it in. It's as if, nothing's happening. It's as if everything is good, everything is great, and that's what the market tells us. No, we don't have to worry about Deutsche Bank. We don't have to worry about what's happening in, European banks in general. We don't have to worry about South America. We don't have to worry about the trade issues going on between US and China. Or do we? Well, I have a little bit of good news here. China has offered to purchase close to $70 billion worth of U.S. goods over the next year if the administration backs off proposed tariffs, according to the Wall Street Journal. It's going to include purchases of soybeans, corn, natural gas, crude oil, coal, and more. All right, so that's some of the trade tensions here that can be eased a little bit, and I find that this is a good thing. I wanted to bring it to you. But it's so topsy-turvy. It has been up and down, side to side, making my head spin, trying to figure this all out. One day I open the news, everything is good. Next day I open the news, everything is bad. It's hard to figure out where they're going with this. But what I see is that none of the risks are priced into the market. I want to see that. I want to see some reality. Is it so difficult? Is that so much to ask? Well, that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. I do appreciate that very much. Hit the subscribe button. Over 110,000 people here on this channel. We are continuing to grow. This is the best community out there where people actually share information from all over the world. Remember, on this channel, I have people from all over the world, and they put their input into the comments, so always read the comments too. Lots of stuff to learn. I learn every day from the comments. Last but not least, if you want the financial education you were not taught in school, these books are the best. Take you from zero to hero, all right? So this here is basically my first book, The Money GPS. You can learn about the 4 asset classes, how to profit from them, give them the history, give you the foundation you need. And the second book, Global Economic Collapse, talks about familiar subjects, but I get into things like earning income, reducing your monthly expenses, and so on. So definitely check these out. Links are in the description of this video. Take care.